All right, this is day two, and we're gonna talk about entries on this. So now that we know about trends and how the market moves, now I'm gonna discuss entries. You're supposed to know the trend first, because how the market is trending is how you get your entry based on what trend we're in. Um, and we know how the market moves now. If you didn't engrave trends in your brain, you need to engrave it, because trends is how you make your money, and how, depending on what trend you're in, is where you're going to enter when you're trading. So your entries are very important. The better your entry, the more money you make. The better your entry, the lower your stops really have to be. And we're gonna discuss entries and stop losses and all that right now. So it's very simple when you're trading, um, and where your entry should be. It's just based off what trend you're in. So we have an uptrend, which is a higher high, higher low, higher high, higher low, higher high, equal low, higher high, right? That's a uptrend. And I've already discussed the uptrend and the downtrend, but I'm gonna always reiterate it, if that's the word you're supposed to use. But I'm always gonna talk about it, because the trend is the friend. The trend is the most important thing, because this is how you get your entries. This is how you make your money. So this is an uptrend. Just giving y'all a refresher. Not gonna go too deep on it. And then we have a downtrend. Lower low, lower high, lower low, lower high, lower low, and we will add a equal high, or that's another high, but we'll add a lower low. We'll make this an equal low. And we know this is a downtrend. Right? So now that we talk about, now we know what the trend doing, and we know what the trend is doing. So we now know how to enter a trade and get an entry. Very fucking simple. When you're entering on an uptrend, price comes up and makes a high, and it makes a low. Your entry is at the low, right there, at the higher low. Those are entries. Higher low. That's your entry. Whenever you're trading, you want to enter when you're on an uptrend at a higher low. When you're buying and when you're selling, you want to enter at a lower high. And the reason you want to enter at these levels is because it's giving you the most money, the highest probability that the trade is going to go in your favor, and you're going to limit being in drawdown. You want to limit your amount of drawdown that you're in. You want to get the best entry you can, and you possibly, I'm saying, the best fucking entry you can possibly get. That's what you want. You want to be in the trade is, you know what I'm saying? You want to be in your trade at a good entry, like your entries. You want your entries to be spot on. You don't want your entries to be way down here when you're selling, or way up here when you're buying. The reason why you don't want your entries to be at a higher high or a lower low is because that means your stop loss has to be lower than the previous zone. So when you're buying, you get a higher high, higher low, higher high, higher low. When you enter at a higher low, your stops are always going to be below that previous higher low. Always below a previous higher low. And the reason that is because the market follows its structure. Higher high, higher low, higher high, higher low, higher high, higher low. The moment this structure gets broke, that's the sign that price wants to reverse and switch into a downtrend. And we're gonna get more into that in another video. But I just want to go over the entries. So when price breaks structure, that means price wants to shift. So when you're trading, your entries are supposed to be below a previous higher low, because the moment price breaks a higher low, that means the trade is most likely wanting to switch, or it can possibly switch, and that makes your trade invalid. When you're trading and you're entering on trades, you want to put your stop loss at a place where it makes your trade invalid, meaning you're incorrect. Meaning if you take this setup and you lose, it's because you had the wrong direction, you're in the wrong trend. That's the only time you lose, is when you're wrong. When you're trading and you're wrong, that's when you lose. And it's okay if you're wrong. You know what I mean? That's why risk management is important, and we'll talk about that later on. I still got more videos to show. But you want to put your stops in an area where your trade is invalid, meaning you're in the wrong trend. So if you lose, you're in the wrong trend. Right? The market goes up. Every time the market goes up, it's supposed to come down. Anytime the market goes down, it's going to come up. So you enter when price has its pullback. That gives you the highest probability to make the most amount of money, and it eliminates the drawdown you have to be in if you were to get in right here or up here. Meaning you're putting more money at risk, and you'll most likely have to downsize your lots, meaning your risk, because you have to make up for how far your stop loss has to be. The better your entry, the more risk you can probably take, or you know what I mean, because your entry is so good that you don't have to put your stop so far because you entered at a good level. And also, when price pulls back, when price always comes back, it eliminates that drawdown you have to be in. And the less drawdown you're in, then the more, the better, the more your headspace is, at peace, and you're not too worried about it. Because when you trading is all psychology, it's all mental, it's all a mental game. If you can't control how you're thinking and looking at the markets, then you're not going to be good at trading, because trading is all mental. So when you're buying, and I'm going to give examples at the end, I'm always going to give examples. When you're buying, you let price make a higher high, and then you enter off of it pulling back, making a higher low. And you don't just enter just because it comes and gets back into the zone because it's a little higher. We always wait on rejections of candlesticks before we enter a trade. And we'll go over the rejections of candlesticks and all that right when I give y'all examples. But you should know what rejections are, aka wicks. If you were to go watch a video of candlesticks explained, please go. If you don't know what candlesticks are and bodies and wicks, then please, I'm gonna teach you everything else, but all the things like lot sizes and candlesticks and body closures and all that, you can just go to YouTube and type in candlesticks explained, or lot sizes explained, or pips explained, points explained, whatever the case may be, because the market moves off pips and points, or whatever. It's the same thing, just different phrases. So if you don't know what bodies and wicks are, and pips and lot sizes and all that, then please exit out here, pause the video, go watch that on YouTube, and get a good understanding of that, because there's plenty of videos out there. I'm only going to show you how the markets move, and then come back and finish the course, finish watching the videos. So boom, prices always comes up and comes down. Anytime price goes down, it must come up. Price always corrects itself. It never just goes straight up. It always going to give you signs before it does something. The market gives you signs, and it's going to give you time to enter. That's why you don't need to be impatient. And then when you're selling, your stops, your entry is going to be at a lower high or an equal high. Same thing when you're buying. It's going to be at a higher low or an equal low whenever you're buying. Remember that. And then your stops are going to be above the previous lower high, because if this lower high gets broken, that's signs of a reversal. That means the market wants to switch the trend, and then you want to be out as soon as possible. Like, you don't want to be in losers too long, and you don't want to be moving your stop loss up and down, around and around. I'm for sure. Anyway, that's 50 Cent song. You want to keep your stops above a previous level, because if that level breaks, that's a bad sign. That means the trend wants to do something else. Structure structure is always going to hold unless price wants to reverse. If structure gets broken, then that's like a good sign. Like, damn, all right, you might be in the wrong fucking trade, and then you want to be out of that trade as fast as possible, and you just don't want to lose, a whole bunch of money trying to hold on to a loser. You don't want to hold on to a loser. You only want to hold on to winners. So stops are above a lower high or equal high whenever you're selling, and stops are below a higher low of the previous higher low, or the equal low. Stops are going to be below that when you're entering these trades. And also, what was I going to say? When you enter right here, this is also support. Support. I'm going to explain support real quick. Support and resistance. Support and resistance is really the same thing as a higher low or a lower high. You can also classify that as some resistance. It's going to resist. We call fucking resistance. We call resistance because it's resistance, meaning it's not going past this point and it's holding this level. And then resistance and support is basically like a floor. It's holding price up. This is a support level, this is a support level, this is a support level, because it's holding price up. When it gets to this level, think of it as somebody picking you up and lifting you up in the air. You put your foot on their hands and they pick you up. That's support. Resistance is like a roof, because anytime it gets here, it doesn't want to go any higher. Like, you can't jump through the roof. Like, think about somebody, you know, blocking your head from doing something, or you try to go through something and somebody's holding your head down. That's resistance. You can't lift your head up. Like, let's example, somebody drowning you and they got your head underwater. You know what I'm saying? That's resistance. They're blocking you from getting up and breathing. So that's resistance. It's the same thing. This is a resistance level, resistance level, resistance level, support. And the reason I'm explaining this is because when we go over key levels and zones, I'm going to use that support and resistance as a phrase for key levels. Okay, so now that we know where our entries are, now we're going to go over examples. But also remember, I'm going to keep saying this. Price follows this structure down to a T. Down to a T. So if price breaks structure on the higher, mostly the higher time frames, because I only use the 1 hour, the 4 hour, and the daily, and then I use those for market structure, aka overall movement that the market wants to do. I use the higher time frames because market structure on the higher time frames are more important. If you don't know about time frames, it's very simple. 1 hour means the candlestick moved. You're looking at the candlesticks, how they moved every hour. The 4 hour meaning you're looking at each candlestick you look at on the 4 hour time frame, meaning that's what happened. That's what each candle did for every 4 hours. It closes every 4 hours. On the 4 hour, it closes every 1 hour on the 1 hour. Self-explanatory. 15 minutes is showing you every candle that's happened every 15 minutes. So that's just time frames. Time frames are important because the higher time frames are stronger because they've been sitting at an area for longer. So when we're looking at entries, you're looking on the higher time frame for this structure, because the higher time frames are stronger, and you drop down to your 15 minutes to get an entry or something to be more precise so you can see the details. Like I always said, the lower time frames are only for 15 minute, 30 minute, are only for entries because they give you that detail. The higher time frames, we just look at the higher time frames for structure. Higher time frames for structure because it shows us the overall move. It's like a zoom out. It's like zooming into a microscope when you're on the 5 minute, 15 minute, and then you zoom back if you want to see what you're looking at on the higher time frames. You want to see smoother, structure. And I flip through all the time frames. Don't always stare at one time frame. Please look at all time frames, because every time frame might show different something, and it all needs to like at least correlate and look the same. Um, so I'll explain that later also. But like I said, I'm showing you how to trade. This course is to show you everything on everything. show you how to trade. And then when I put it all together, you should know how to trade. And everything that I talk about is all going to come together as one. But right now, we're just going to talk about bit by bit. And right now, we're just talking about entries. So your entries when you're selling at a lower high, and your entries when you're buying is at a higher low. Self-explanatory. Now we're going to look at some examples on how you should enter the market and what your stops and stuff should look like. And I'm going to explain why it looks like this and why it's supposed to look like this. Right, so I say the market structure is market structure and it follows it to a T. So whenever price breaks out of a zone, whenever price breaks out and starts switching, it's going to, if it's switching a trend or whatever. Now let's talk about trend switching later. Let's just talk about entries. So if price creates a higher high, price needs to come back and create a higher low. So you always wait for price to create that higher high first, and then you wait for it to come back and create that higher low. This is the trend. This is how the trend works. So when you have to wait. If a higher high gets formed, it has to create a higher low. If it doesn't create a higher low, you don't have an entry. If it doesn't create a higher low, we're talking about buys here. If price creates a higher high, it has to come back to create that higher low. It follows market structure. So when you're looking for an entry, when you know what trend you're in, you're looking for a higher low to be created or a equal low to be created. Look, you'll see it right here. It makes a higher high and then comes back to make that higher low. This higher low is your entry. We're going to do a long position and we're going to put this right here. This is your entry right here. Your stops, give it a little breathing room below this higher low, because we know if this higher low gets broke, then we know price is shifting to bearish. So your entry would be at a higher low, and then you'll take it back up to a level of sellers, and we'll talk about buyers and sellers next video, and zones and how to mark up charts next video. But right now we're focusing strictly on entries. So when price makes a higher high, as soon as it comes to correct and create that higher low, that is your entry. That's when you enter the market, and then you ride the trend. And we'll talk about take profits and all that next video. So I'm going to give you more examples of that. Boom. So look, check me out, because I'm giving you sauce, folks. Look, price makes a higher high. Boom. A higher high and a higher low. Even if you didn't get in on this higher low, it still created another higher low. And then price breaks, creates a higher high and a higher low. That is your entry when it forms that higher low. Remember, price is always going to come back. What goes up must come down. What goes down must come up. Understand that. So if you see price breaking out of this zone and it's just looking to create that higher high, don't get scared. And you don't trade the breakout. You don't trade the higher high, because you know it has to form a higher low. So your entry will be when it forms this higher low. Boom. You get in with this higher low, and you put your stops either below here or below this previous higher low if you want to be a little more safe. I usually put it below the next higher low just in case. I want to give my trade some breathing room. I don't like to get wicked out. You want to put your stops somewhere where it makes price invalid and you don't get wicked out. Don't be scared when you enter this trade and you get put in drawdown. Drawdown is normal. Drawdown is a part of the game. Being in drawdown, like being down money, meaning if you see negative 100, negative 500, doesn't mean you lose the trade. You don't lose the trade until you get taken out of the market. Until your broker either takes you out of the market or your stop loss gets hit, then you're out of the game. That's when you lose. Just because you're in drawdown doesn't mean you're going to lose the trade. Drawdown is a part of the game. That just means you got a shitty entry get better at getting entries, and you won't be in as much drawdown. All drawdown means is you got a shitty entry and you just need to get better and perfect your craft. You know what I mean? And stop being scared. Stop being scared to hold trades. When you trade, you're gonna make money. As soon as you know how to trade, it takes away all the anxiety and all the eagerness and all these things because you're just scared of losing money because you don't know how the market moves. Once you understand how the market moves, you're no longer gonna be scared of a trade. You're no longer gonna be scared of drawdown because you know how the market moves. All these people that trade on the 1 minute, the 5 minute, the small time frames, or they scalp and they don't swing trade or they don't day trade, it's all the same. It's all trading, but they don't know how the market moves. So they move their stop losses up to break even, and they do all this goofy shit. And because they don't know what they're doing, I'm teaching you how to trade. I'm gonna show you how to do this, so you won't be too scared to hold trades. You need to hold your trades. Like you gotta let the stuff play out. We're looking at higher time frames. So it takes a little more time. Sometimes the trade might take a couple days. Sometimes the trade might take 30 minutes, an hour. It just depends how the market is moving. So you need to be patient with the setups. You need to be patient with your entries and you need to perfect your entries. Perfecting your craft, or at least trying to perfect your craft, makes you way better. And I'm telling you, it's going to make you money. Until you got to perfect these candlesticks before you want to make money. If you can't perfect these candlesticks, you're just going to keep losing and losing and losing. Right? So that was buys examples. And also, the only time you can, let's say you get in right here and your stops are right here. The only time you move your stops is when price makes another higher low and a higher high. Let's say you got in right here, boom, and then price is moving, you see it make a higher high and another higher low, then you can move your stops to break even. But sometimes that's not always the case. I really never move my stops because sometimes price may come down and slap me out at break even and then continue going in my direction. So I keep my stops all the way below that previous level. Um, Unless price is like way already out of space, then I'll move my stops to break even. But most of the time, when it's still near my stop loss zone, I keep my stops deep because I know my trade is going to hit. I know it's going to hit, so I don't need to move my stops because I know how to trade. So that's a sign of when you're buying. Now, when you're selling, remember, when you're looking at market structure, you're looking at the 1 hour, the 4 hour, the daily time. You're looking at the higher time frames. 1 hour is really like the bread and butter for market structure, I noticed. But if the 1 hour looks stupid, look at the 4 hour. If the 4 hour looks dumb and choppy, look at the daily. That's simple. So, yeah. Um, so let's look at sales. Look, lower low, lower high. Simple. You get in at the lower high. Boom. This lower high, you put your stops below that previous lower high, and then you ride the trend. You ride the trend, and it keeps trending. It's still creating lower lows, lower highs. Yeah, you're going to be up some money, and then you're going to be down in some money, but that doesn't mean nothing. Yeah, you're going to be up. Can this fucking move down, please? Boom. And you ride the trend. So you get in right here. Put your stops below that previous lower high because if it's selling off, if this lower high gets broke, that's a sign that you're in the wrong trend and price wants to go up. It doesn't want to go down. And we'll talk about reversals next video, but that is a lower high. The market moves like this on multiple occasions. So it always moves like this. So this is where your entry will be, is at a lower high. Do not enter on the fucking break. If you would have entered on this break, you would have seen price come back to retest this area. You know what I mean? So lower highs are just a little lower than the previous high. So usually when price breaks a zone, it comes back to usually test that area or create an equal high at that area. But before you enter, you need to look at rejections of candles. Right? Like I said, go look at a video what candlesticks mean and rejections and wicks. So wicks and bodies, you're waiting on body closures. You're waiting on the market to close. Well, not the market. You're waiting on the candlesticks to close at a level and reject an area. You'll see when price gets here, it will reject this area right, and create some resistance, meaning price doesn't want to go above here. It closes, is wicking out. Wicks are just rejections. That's like wicks. Treat wicks like when you're going up to a girl or a guy and you're like, hey, I think you're cute and I want to talk to you. And she's like, ooh, no, nigga, you ugly than a motherfucker. You know what I'm saying? That's what wicks are. You want to see those when you're trading. You want to see wicks. You want to see body closes. You don't want to see price go above this area. That's a good sign. Wicks are a good sign. In trading, wicks are a good thing when you're trying to take a trade. When you're getting rejected in real life, it's still a good thing because first off, you ain't waste your time, and now you know that you just gotta step the game up, player. So you're waiting for body closes. You're waiting for wicks. You see price creates that higher high, comes back to test the zone that it previously broke out of. Remember, a higher low is always going to be a little higher than the previous stuff or equal to it. So price is going to get to an initial breakout zone where it broke out, and then it's going to reject 1, 2, 3, 4 closes and 3 rejections from this area, and then it goes back up. So another look, comes up here, it doesn't create a higher high, it creates a lower high, but it still creates a higher low. So price is still good because it didn't break no higher lows. It created another higher low. Price will do that sometimes. Like price ain't perfect. Sometimes price will not have enough volume in the market to go make a higher high right away. So sometimes the market structure it will still hold because it will create a lower high because you know this will look like a higher high and this will look like a lower high, and then you'll be like, oh well, it's gonna sell off. No, sometimes price will come and create a little baby high because it just doesn't have enough money or you're out of session, and then it will just come back and create a higher low. As long as the market is still creating higher lows in the market, that's still bullish momentum. You know what I mean? Just because you see lower high, lower high, lower high doesn't necessarily always mean that price wants to sell off and switch the trend unless it breaks a higher low and creates a lower high. But we'll talk about reversals. But as long as price is creating consistent higher lows, higher lows, higher lows, and it's holding that higher low structure, it's still buys are still valid. Same thing when it hits a level of sellers. It has to break structure first and then create lower highs, and then it has to break a lower high in order for it to continue wanting to or switch the trend and want to buy up. Stay with me, don't overcomplicate it. Lower high, it breaks structure, lower low, lower high. You know what I'm saying? Even though it creates some higher lows, it still never breaks this lower high, so sales are still valid. It's still holding structure. It's still creating lower high, lower high, lower high, lower high. So don't be scared if price fails to create a lower low and creates a higher low. If it never breaks a lower high, you're still good. And we'll go over reversals like I said. So that would be that thing. And we'll talk about reversals. But look, even right here, you'll see price. You'll see price get to this zone, create a lower low. I mean, a higher. This was bullish. A higher high, higher low. Then it gets here to this zone, breaks structure, breaks this higher low, creates a lower low and a lower high. As soon as that lower high, that's why you don't trade the breakout and you trade the lower high. You'll take this setup right here, and then your stops will be above this zone where this zone wick. If something wicks out, I kind of put my stop loss above that wick just in case price wants to come back up here and just tap it and wick out again, just to be on the safe side, bro. Because you don't once you place a trade or you get in on this entry, this is an entry. You want to be in that entry, and once the only time you want to be out of a trade is when your TP hit or your stop loss gets hit. So if you try to put a baby ass stop loss, then you're gonna get fucking wicked out, and then you have to re-enter, and you just lost money for no reason. That's why you got to give yourself some time. You got to give yourself some breathing room. You know what I mean? And this is an example of a equal high being created. Prices on a downtrend is creating a lower low, lower high, lower low. It creates a equal high. It's the same thing. You will get in right here. This will be your entry. As soon as it creates this, you'll see. Look, you'll see. This is a perfect. These are some good ass examples. You'll see price. Usually, price will come and break and come back to that initial area it broke out. Sometimes it will come directly up to it. Sometimes it'll create an equal. But sometimes you'll see price create that lower high, a little way lower than you'll think. So as long as it comes down, creates that lower low and that lower high, and you see closed candles, you're good to go. You could have, even if you didn't enter right here because you didn't know what it was doing, you still could have entered right here and put your stops above here, this would have been your entry. That's another entry. That's another entry when you're selling. Look, the market does the same thing. Lower low, lower high, lower low. Builds bullish structure, but it still gets to this level and creates another lower high. We're going to talk about levels in the next vid. But stay with me now. I'm just talking about entries. This lower high would be your entry right here. I don't know why it keeps being so long. Like, yo, no Diddy, calm down, shorty. You know, this will be your entry right here. Stops above this lower high or this lower high, because if price breaks out, you know your trade's invalid. But we are on a downtrend. Price is showing you bearish momentum. It's not showing you any bullish structure. So you take that sell and then you just ride the trend and you just keep riding it. And structure never gets broken, so you get to hold your trade. You hold these trades until you get to take profit or structure gets broken and shows you it wants to reverse. And we'll talk about reversals. Like that's why people get out too early, because they're scared that price is going to reverse on you. Price is not going to reverse on you. It's just not. Price doesn't come drop and then just fucking comes back and takes you out because it hates you and is chasing your stop loss. No, nigga. The markets don't give a fuck about you. The markets are going to move the way the markets move. So you either master the markets or let the markets master you. You know what I'm saying? Like, you either bend the motherfucking markets over or you get bent over by the markets. Nigga, it's your choice. You see what I'm saying? So, boom. That's another entry. That's lower highs. Like, lower highs. Look, check me out. It does the same thing. When I'm speaking to you, I'm speaking, boy. Look. Price created a higher high and a higher. This is not even a higher low. This is kind of this is point is higher low, and I'll talk about consolidation zones also in another video, because price was sometimes in a consolidation zone. Bro, I don't want to confuse you, but price will start building higher lows or lower highs in consolidation zones, and it will give you signs that it wants to change the trend in those zones. And I'll talk about that in another video, because like I don't want to crowd your mind right now with too much things. I just want to crowd your mind with entries. So we'll see price got here, created that equal high. It created that equal high, but it still created a higher low. As you see, price got here and closed candles and rejections. Price didn't want to go any further than this. It was closing below this. You were saying it was closing. It was creating that support. It was creating a support line, aka a higher low, and price didn't want to go. That's where you enter. You see it create that. You enter right there, bro. You can either put your stops below this zone or this zone. It just depends on you and how much you want to risk and how scary you is. And you know what I'm saying, how much, you know what I'm saying, how scary you is. That's another entry. Price moves like a mug, bro. Like I said, when price breaks out, it's not always going to be perfect. It's not always going to create that higher high, but as long as it creates another form of support or a higher low, you're still good. You know what I'm saying? And price broke out of this zone and created a baby higher low. Like I said, price ain't always going to be perfect and come down, you know what I mean, back to that initial level. Sometimes it will break out and then create a little baby higher low. As long as you got rejections and you see price switching back over, then you're good. Same thing right here. It's a perfect example. It broke this zone, created that lower low, but it created a lower high, a baby lower high. But price shifts back bearish right here, and it was showing you signs that it wanted to go bearish. It created some resistance, and then created a equal low, and then another lower high before continuing dropping. And we'll talk about lower time frames and how they correlate. And lower time frames, you'll see the market, you'll see the trend switch on the lower time frames. But we'll talk about that when we talk about the reversals. So look, higher low creates a lower high, break structure, and then even right here, you see it break this shit. It created a lower low and another lower high. That could have been a sell entry right here. Lower high, because it created a lower low, then a lower high. Remember, lower low, lower high. That's an entry. You fucking enter and you put your stops above this zone, above this resistance level, and then you just let the trade play out. This is a 1 hour time frame. This took days in order to play out. So you're going to be in trades for sometimes days, bro. It just depends. Like, all this takes time. Look, This is another perfect example of the market creating that high, but creating a baby higher low, but it still created that support, aka a higher low. It's created some support. Support is kind of like the same as a higher low and stuff. You can go off support zones and resistance zones because look, price is going to create resistance zones. Look, this is a lower high right here, also a resistance zone, and this is another good example on why you need to put your stops below a previous lower high, because if you would have entered right here off this lower high, you see that price kind of came into here. It wicked out. It never closed, but it wicked out right here. It wicked out right here. You know what I mean? If your stops were just a small and not above just like this, you would have got taken out, and then the trade would have went in your favor anyway. That's why I say your stops need to be above that little level or previous lower high or below higher low, just so you don't get stopped out and then you lose a trade and then you're upset because you lost money and then the trade ended up going in your direction anyway. Look, had this strong period. We don't trade breakouts because look, you look at this, price had this strong move to the downside and came back up to create another lower high. You could have got in right there, you know what I mean, and let it play out. Lower low, lower high, lower low, lower high, then that lower low. Like, you know what I mean? Those are entries. That pretty much shows you a lot of examples. And this is on Bitcoin. I only trade Bitcoin, gold. I only trade crypto. Crypto, gold is really my main thing, and USD JPY, because those are the three pairs that I like trading the most, because it gives me the best market structure. Even look right here on gold. Price came, it broke this higher low, created a lower low, lower high, lower high. Remember, it didn't create that lower low, but it still created two lower highs, so that makes that sell valid. Boom. Price didn't want to close above this level. You could have got in right here and then rode price down. Price was consolidating right here, but it was still trickling down. I remember I took this setup also. But look, lower low, lower high, lower low, lower high, lower low, lower high. Like, it just does the same things. Like bro, prices follows that trend. And you see what I'm saying? It follows the trend. Even on USD, JPY, this is a pair I trade also. You can see it follow market structure too. Price gets to a zone. But USD JPY is a little different because it's a forex pair. I usually like to trade gold and Bitcoin the most because it's a little different than forex pairs. But I only trade pairs that follow the market structure down to a T. If it doesn't follow market structure down to a T, like something like US 30, it just moves stupid. NAS 100, I don't trade those because they don't follow the trend. They don't really follow market structure. Sometimes that can be a little manipulated by news and Trump and all that. So I just stay away from it. But you'll see right here on this. This is a good setup. You see price create a lower low and a lower high. You could have took sales down here. And I'm gonna talk about zones and what price does when I talk about take profits, because price can do a whole bunch of things when it enters certain zones, and I want y'all to be full aware of that. But like I said, I want to give y'all one video at a time. So this is a lower high, but it still created a higher low. Boom. Higher low, higher low. You could have got here, stops above here, and you see the trend keeps trending. This took days to happen, to play out, days. You know what I'm saying? Higher high, the price comes down here, higher low, creates another lower high, comes back down to this area. Like, it still follows the trend. Look, higher high, higher low, higher high, higher low, higher high, higher low. Like, the trend gets followed. Also right here, break structure, boom, comes back here, creates a lower low and a lower high. Like, that's another entry also. And we'll talk about take profits and all that too, because in zones and how take profits work and how price can build lower highs and higher lows at certain zones. This could have been an entry also. You see price get here and start rejecting this area on the 1 hour, then it comes down. That could have been a setup. These are entries. I gave y'all a whole bunch of entries, a whole bunch of examples, and I want to keep giving y'all examples. Lower low, lower high. This lower high gets formed. Boom, that's another entry. That's a setup. And you just catch the trend. You catch all that. You could have caught all this move. Look, this is another entry. Boom. Price comes, creates a lower low and a lower high. You could have caught this whole move. You know, stops above that previous zone. you could have caught that whole move. Like, just, like, trading is real simple. You just gotta learn it. Once I teach you this, you're gonna be like, damn, I used to think trading was just impossible and hard. Lower low, lower high. You enter at that lower high when it gets created. Put your stops above that previous level or just this zone. Like I said, it just depends on you and what you want to do. You enter. You just made money. Boom. That's a good move too. And it's just like the same old thing. The same old thing. Even right here. Price came, created a higher high and a higher low. I wouldn't count this as like a higher low because it's kind of like goofy. But you could have got in right here. And this is another example on why I keep my stop loss a little deep below that previous higher low, because price came back here and rejected. And if your price was this close, if your stop loss was way up here, you would have got stopped out, and then price still went in your direction anyway. So remember that when you're putting your stop losses, always give yourself some room to breathe. Give your stop loss some room to breathe. And if you got to downsize how much you're risking, then do that. Like, you put entry right here, you put your stops below this level, this zone, because if it hits your stop loss, then you're in the wrong trend. You could have got in on this higher low. Like, you know what I mean? And then that's another entry. Even right here, this is another entry. Price comes down, breaks, and then comes back to this level to retest it and create that lower high. Even if you didn't get in right here, you could have got in on this lower high being formed or this lower high being formed, and then took price down. That's another setup. Like, the entries are easy. That's why I went over trend first, because that's the most important thing, because that's how you get your entries. But that's pretty much it for entries. Now you know how to enter the market whenever you're looking for a setup.